Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Welcome back to Talk Stocks with me, and a warm welcome to our new viewers. This is another weekly market digest where we focus on data-driven insights, cutting through the hype, fraud, and emotions. Today we'll recap the markets, review the key NGX trends via the market eternals, and highlight short-term trading opportunities in the US markets. Let's get started. Let's begin this section by doing some housekeeping. We want to detect whether we have a trend, and the way we are able to detect a trend is using my notes here, or this key here. A trend can either be bullish or bearish. We identify a bullish trend when the close price, irrespective of the time frame, is above the 20 EMA. EMA stands for exponential moving average. The plus DMI is above the minus DMI, and the ADX value is at least 20. So it could be 25, 26. So it's at least 20. We detect a bearish trend when the close price is below the 20 exponential moving average. The minus DMI is above the plus DMI, and the ADX is also at least 20. Whenever we can neither detect a bullish nor bearish trend, we say we are having a neutral trend, or the chart is neutral, meaning we want to stay away, or we want to be patient. WTD stands for week to date, YTD stands for year to date, PY stands for previous year. Again, we want to do a little change, or we are effecting a little change in this section. Rather than going through each of these assets, we're just going to focus on where viewers can have the potential to profit in the near term, which is the short term, as well as the mid term. Again, those markets or commodities are what we are going to go forward with a bold font. The first is the Canadian market, which you can buy if you hold through the ETF VCN. This is an ETF that is managed by Vanguard. This week it went up 1.73%, and year to date is delivered 2.98. The short-term trend is bullish. The mid-term trend is also bullish. In fact, it's a strong bullish trend in the mid-term. That's why you have this asterisk. The next market that has the potential to return profits to investors or traders is the NGX ASI, which is an index that tracks the Nigerian market. This week, that market delivered 3.55%. Year to date, the NGX ASI as a whole has delivered 4.30%. The short-term trend is showing a strong bullish trend, and the mid-term trend is showing a strong bullish trend. The next market that's showing huge potential to profit investors or traders is gold, which you can buy via the ETF GLD. So if you hold GLD this week, you saw a return of 1.99% in your portfolio, and if you've been holding GLD from the beginning of this year, you're actually up 4.58%. Looking at the short term, the chart is showing bullish trend. Also, when you look at the weekly time frame, which represents the midterm, we are seeing strong bullish trend. I also like to call out the US small cap stock, which I proxy with the ETF VTWO. You can see this week it delivered 4.16%. In fact, across my list, it was the top performer this week, and yet today it has delivered 5.68, which again is the top performer. Again, the cut in interest rates, you expect small cap stocks to do well. Looking at the charts in the near term or in the short term, even though I labeled it neutral, it's clear that the buyers are really present in that chart. I can see the price, the close price is above the 20 EMA. Even the plus DMI is above the minus DMI, but the ADX is not yet 20, but it's developing. So you want to pay close attention to the US small cap stocks in the short term. But in the midterm, it's bullish. So yeah, I think that's important for me to call out. Now let's shift into the NGX ASI and look into the market internals to see what we can learn from the NGX markets. The NGX market internals provide a data-driven look at the breadth and strength of the Nigerian stock market, specifically the NGX ASI. The market internals is a way of me opening the hood of the market to look at how rotten or efficient the components of the market are. How do you read this report? The market is tagged as either strong, meaning you have broad participation from the various sectors that comprise the NGX ASI, such as industrials, oil and gas, consumer goods, banking, and insurance. It can also be tagged neutral when you have fair participation, meaning only few sectors are actually contributing to the advancing or decline of the market, whatever it is, and it can also be weak. So now that we understand what this market internals is and how to read it, what is my rating for the NGX All Share Index today based on the price action as at the last trading day, which was on Friday? You can see it has a tag of neutral, meaning neutral rating, meaning we have fair participation from the sectors. What sectors are actually contributing to the advancing of the market? We're going to get through that in this section. The data-driven look at the market comprises of some KPIs, meaning from the 144 stocks currently listed in the NGX ASI, we want to know what percentage of those stocks are trading above their 50-day moving average. The 50-day moving average is a very key technical indicator that traders or investors who understand the chart or the tape can use to assess whether buyers or sellers are in control of the price action. This week, we saw that the percentage of stock above the 50-day moving average increased from 61% to 80%, which represents a 19 percentage point increase, which is very huge. When we also look at the percentage of stocks trading above their 200-day moving average, we can see that it increased from 76% to 82%, which is a 6 percentage point increase. Both ratings are very excellent. You can see 80 and 82%. This is to show that the market is really firing well on all cylinders. We also make use of the Winston stage classification to understand how the market is advancing or not advancing. Again, we looked at the percentage of stocks within the NGX ASI that are advancing. You can see that the percentage of stocks that are advancing, which we tag in stage 2, increased from 60% to 74% this week. It represents also a 14 percentage point increase. When we now focus that within those stocks in stage 2, what percentage of stocks in general are in a strong stage 2 uptrend, right? So this is like the best of the best from stage 2 stocks. You can see that it increased from 35% to 42% this week, which is also a 7 percentage point increase. With this data presented, let's then look at a qualitative summary of the market. I'm glad to mention that the NGX ASI is in an advancing phase. In fact, it's in a strong uptrend. The NGX 30, which is another basket of the 30 capitalized stock within the market, is also in a strong uptrend. The
The consumer goods is in a strong uptrend, and the insurance is sitting in a fine line, right? The sector is advancing, but it's recently, I'll say this last week, it's nudged into the uptrend phase, but it hasn't confirmed. That is why I give it this star. But it's advancing, meaning it's going up, but it's trying to get to a stronger uptrend within the advancing stage. Other sectors which might either just be advancing or declining include the industrials, oil and gas, and the banking sectors. Again, market internals helps us to see beyond the index. Are many stocks and sectors participating in the move, or just a few? Deciding whether to go long or short the US market this week also entails looking at data. What type of data might you ask? What is the reading of the VIX? What percentage of stocks are trading above their 50-day moving average? What is the percentage of stocks that are trading above their 200-day moving average? What is the percentage of stocks in the S&P 500 that are advancing? Once you look through these facts, you can decide whether you want to go long or go short. Assuming you decide to go long because the data supports you going long, my approach and the data vesting approach is the forest to tree. What does that mean? You want to know what sectors are strong within the US markets. What does that actually mean? I want to know what sectors are showing strong short-term momentum. Once I find those sectors, I could either play them via an ETF, or if I want to be one step smarter, I can look for the strongest stocks within the strongest sectors, which I term as hot stocks in hot sectors. This chart here at the sectors that comprise shows a figure of some of the sectors that comprise the S&P 500. We have 12 sectors, right? But this is showing you the sectors that are showing strong short-term momentum. The darker shade of green is the 3 months to date performance, and the lighter shade of green is the month to date performance. So looking at this, we could come up with a mathematical way or a statistical way to find out which sectors are strong. Looking at this, you could see that based on this data, you could see that the material sector is showing strong momentum, especially when you look at the month to date performance. All of this here are showing strong short-term momentum, but in this case, if we focus on the material select, you could either play this by an ETF. If you use technical analysis to time your entry, you could play this. Now, another way is to look for the strongest stocks within that sector, and that's what I have here, right? And I told you, I've said in my last week's video, I have a mechanism where I'm able to identify them via my custom scoring mechanism here, which you can see here. So ALB has an adjusted score of 3.33, FCX has an adjusted score of 1.85, and month to date you can see their returns. ALB is up 12.34, FCX is up 9.28, SW is up 10.56, DOW is up 11.85. I don't know these companies, I just look at the data. And again, the idea is once you have this as your watch list, you use technical analysis to time your entry when you see indeed that buyers are in control of the price action, or your rules, whatever rules you have to enter the trade and make, take a trade and you implement effective risk management to protect yourself. Remember, trading involves risk, so you want to make sure that your reward is worth the risk you are taking. And that's a wrap for this week's digest. Most markets are moving sideways, so it's a time to stay patient and stick to the facts. But keep an eye on the US small caps, Canada market, Nigerian market, and gold. They are showing some real bullish momentum and could offer opportunities for investing as well as trading. Remember, it's all about data, not hype. Stay sharp, and we'll see you in the next weekly digest. If you found this helpful, drop a like or hit the subscribe button, and please share your market view in the comments. I like to read and respond to you. Till then, stay safe.